Good morning. What I'd like to do, introduce myself first. My name is Jonathan Vaux. I've spent, until the turn of the year, the last 4 years of my life, managing the sales and introduction of V.me across Europe. So some of the examples I give will be based on some first-hand experience. What I'd like to do is really use Visa as an example of some of the challenges that I think I see across the board in the industry and use that almost as a case study, and then give examples of what we're trying to do to evolve. So if you look at our business, it's a very strong business. We've got over 500 million cards. We process 1 in every 6 euros in the EU, 1 in every 3 in the UK. And it's a really robust service. And if you look at that service, we've got 100% processing availability and 5.9 service quality. So that's a fantastic asset. But in the world of innovation, that's both a blessing and a curse. One of the kind of hypotheses I'll put forward and like to discuss today is around any innovation, and I'm not trying to shame any of our friendly banks in this room, but any innovation is likely to get way less airtime in the press when it's launched than if your ATMs go down and some person cannot get access to cash to pay the vet fee for their puppy. So we have to find a way of balancing this innovation with providing the service quality and balancing that too. Because too many projects that I see wither on the vine because the risk appetite in our member organizations is challenged. And I'll take the example of V.me. Some of the challenges that we're facing in getting banks to a stage of comfort to get something out in the market, considering the innovation and latitude that's given to other players, it can be really, really challenging. And so this is a constant thread. How do you balance that risk appetite, get stuff out there? Because one of the key learnings in digital is it's all about getting something out into the market, iterating, learning, changing, growing. And that's a completely different mindset to a lot of the traditional culture of financial institutions that we face. She actually spoke about it, and I think if you look at Visa, one of our key capabilities, and I stress, we don't think of ourselves as a consumer product organization, and I think at times in digital we have strayed too far into that space. What we are about is about getting that right balance of convenience and security, creating interoperability, delivering that certainty of payment, delivering standards and specifications. And what we'll see is a shift more and more that we've realized that a lot of the value that we can provide in the ecosystem is around providing these sort of services. Because the other thing that is killing a lot of innovation is loads of these innovations are great, and the ideas and the imagination is fantastic, but they're not going to get scale. If I take the wallet space, in France, there are 4 competing wallets. What you'll find, and that's not even counting the established ones, each of those wallets will have been run by a product team in the respective organization, including Visa, who will have a view that their customer experience is the best. But when you go and try and sell that to a merchant, it's 4 separate integrations, it's 4 separate different technical specifications, and not one of you will have the necessary scale to make the business case to make that work. So we have to find this balance of, again, ensuring interoperability versus delivering our personal vision of a customer experience. Now, another example that Visa is one of the top 10 brands in the world. Why do we have that brand customer confidence? Primarily because what we do is we deliver a consistent acceptance, convenience, security promise at the acceptance mark. And I think that's, again, an area where we will be looking to push more, is that recognizing the value in our brand promise is around enabling acceptance. But I have to say, it's staggering to me that how many organizations I deal with, some of you in this room, will want to build net new brands that cover acceptance and that don't ride on the existing rails and the customer trust. Because one of the key barriers, and we're all driven by our digital early adopters, but one of our key barriers is that many consumers don't feel safe, don't feel confident, and we need to build that very quickly in our ecosystem. Another frequent observation I would make is that a lot of us have built technology that, in all honesty, I think we're probably looking for a solution for. Instead, one of the things is, it's clear there are many pain points in the customer experience today that we have not collectively solved for. So I'm going to take the right-hand side, the mobile. The number of solutions that are poorly designed for mobile. I'll use our own example. I'd be the first to acknowledge. Entering verified by Visa onto a handset is a nightmare. It's not fit for purpose. We live in a world where people like Apple announce Touch ID. We see various forms of biometrics. We as a community have to get to an environment where we recognize and work with those pain points. Clunky banking apps. The number of safe keys that are required to get onto a mobile banking site, when surely the critical objective is to make sure you have as much engagement with your customers as possible. And customers recognize this. And again, when people design solutions, they are often not differentiating between the mobile experience and the online experience. We've done some research that shows that consumers tend to have quite significant patterns of behavior. So I will tend to make certain types of purchases and have certain apps on my phone for making payments on a phone. Those will often be what we call kind of firefighter. So it's I'm owing a bill, I've suddenly remembered I need to pay it, I pay it urgently. I want something small. Then we have tablet purchasing. What I'll be doing is I'll be sitting at home on the TV, watching House of Cards or something like that. And most people now, finally men are multitasking, will be watching TV and scanning on the tablet. Those we will browse more, and we will behave in a different way when we're buying. Finally, on a laptop or a PC, if I'm making a large purchase, I want to visualize it, I want to contextualize it. I will have a different journey when I'm making that payment, and I will tend to buy different things. We need to start acknowledging those different behaviors in the way we design solutions. The security features are another example. So we need to start in the same way that we have on physical now of having contactless as not requiring chip and pin below certain thresholds. We need to start introducing that sort of latitude into card not present or e-com on boundaries. And those are things that are going to be increasingly important, that we start recognizing those customer pain points. Because genuinely, customers today are probably more concerned imminently about making their life easier than about a lot of the value-added services that we are collectively investing huge amounts of money in. So at Visa, we've definitely spent a lot of money building products that are designed to meet consumer needs. So examples, loyalty and targeted marketing, contactless, we're now seeing that really passing a tipping point. That will enable mobile NFC and stuff like that as well. P2P is an interesting one. I actually think it's a collection of various subsets of opportunity, whether that's me paying my babysitter, whether that's me paying a utility bill, and I think we'll see more and more differentiation in that space. As I mentioned, we've built and have now launched V.me by Visa, which is a wallet which does offer significant improvements in payments. And I also think alerts is something that probably has been underutilized, and I think with things like cloud-based messaging are a real opportunity. Our research shows that consumers tend to look to their mobile banking apps as effectively money management tools. It's about transaction experience, checking, did the bill I was meant to pay get paid? Did the transaction go out? Less, frankly, about value-added services. And I think there are things that we as a community can do. If you think about WhatsApp and cloud-based messaging, messaging's not much cheaper. There are opportunities in that space. So we have built products, and I think what they will be is adopted and utilized. But increasingly now what we're seeing in a world of APIs is that those need to be integrated more and more into other people's offerings, whether that be your mobile banking capabilities, whether that be merchant apps. Payment tends to be a pretty thin slice within the overall experience. So we're working with a large retailer who's got a fantastic loyalty program. Their proposition is that you have an app that can pay through, and that combines your loyalty card, your paper voucher today, and payment. It's a streamlined experience. And those are the things in that if you look at the number of existing loyalty customers they have today, those are going to overcome one of the great challenges that most of us face, which is registration. Getting sufficient value proposition that customers are going to want to use that solution early doors. So what we're trying to do in Visa more and more is continue with our products, but also look at what sort of components do we have that we think can add value. So, authentication as an example. One of the big challenges in the financial systems today is that even though there's some really cool stuff going on with customer ID and authentication, such as thumbprint, geolocation, device ID, often that's not factored into the message structures and processes of core banking financial payments. We have to find a way to collect that information, because what that will do, it will drive down cost, it will drive down risk, but most importantly, it will lead to a better customer experience. Tokenization's one that is front of conversation with a lot of people. My colleague Scott Manson is here in the room. He can talk about that much more knowledgeably than me. Rather than necessarily building out loyalty solutions, what data can we provide that enriches those solutions? Registry service is another example. Today, probably one of the key pain points for card-on-file solutions like Amazon is what happens when your customer's been on holiday in the States, shopped at Target, and you have to reuse your plastic. What will happen in practice is that you will contact your customer, you will arrange for a new plastic to be issued. It'll probably take them at least 3 to 5 working days to get there. In the meantime, if that customer wants to make a payment on their Apple account, their Amazon account, their Waitrose account, if that's their default card on file, they'll have no means of using that. So what they'll do is they'll put another card in there. And the challenge of dislodging that card is going to be really, really difficult unless that card gets stolen as well. So there's things we need to do, again, that recognize the pain points for customers in the digital experience. So what we're trying to do in Visa is, I think at times we've tried to champion certain technologies over others, but honestly look at become tech neutral and look at all the different cloud-based card-on-file type technologies going to be out there. QR codes are going to be used, tokenization, officer service, how safe is Bluetooth, what do we do about manual PIN code entry. So all of these examples, what we need to do is look at the use cases and make sure that they can work together seamlessly and it becomes a very ubiquitous, easy to access solution. But what we need to do and recognize, I think, in retail banking is that we have a really unique set of services. So that's just an example of the various complex regulatory challenges that Visa has as an organization and the various stakeholders that want to have discussions with us. And that's becoming even more regulatory as we speak. And what we need to do is find this balance between, I apologize if you can't see it, on the left-hand side, the lower down scale, legacy systems, the degree of risk appetite, making sure we manage the service availability. On the other hand, creating an agile environment where you can fail fast and iterate. And I know that I take the example of Barclays. I think that's one area where Barclays have shown true leadership, is in the idea of getting something out there, acknowledging it's not 100%, doesn't solve for every scenario, but learning, I'm not suggesting they fail, but learning what needs to be adapted and iterating from that process. Because too often we are collectively investing in huge monolithic projects in an environment where failure rates can get as high as 90% in many industries. That's what we have to do, and we have to do it quickly. Thank you very much.